monthly chart, we had a tight bull channel and trend line break to a higher high, and we've had 3 consecutive bull bars on the monthly chart. Bull bars are getting smaller, and then July ended up being a smaller bull bar than the bars to the left, and that increased the probability that we're probably going to end up getting a pullback. So what's the chances that August is a big bull bar? I think it's pretty low. I think more likely it's going to be something disappointing. Look at the open of August and the close of July. We're gapping down, and that's a sign of sellers above. Now, what's the one thing we know about this chart? The open of the month is 1075, and the high of the month is 11.5. What's the probability that the tail above the current month is 3 ticks? There's probably a 99% chance it's not going to be 3 ticks tall. I say that joking. I'm sure it's better than 1%. But the odds are we're going to go above the open, and we're going to create a tail above the bar. And that makes me think that we're probably going to go above today's high. But we're probably going up here at some point, probably over the next couple of days, certainly within the next 30 days. Daily chart, we have a tight bull channel, and we're testing the moving average. However, first bar below the moving average in a lot of bars, that makes me think there's probably buyers down here, and we're probably going to test the moving average once again. The bears, they need more selling pressure than what they've done right here. Now, if they're lucky, maybe Monday gaps down and we get a big bear bar. But even if we do, look at the euro dollar, tight bull channel, big sell off, followed through selling, and we pulled back. Why do we pull back? Because we're in an overall trading range. And on the daily chart, I suspect that this sell-off that we're getting is going to lead to sideways trading at best for the bears. So I suspect we have a bull trend. We have a trend line break. The bulls need some sort of lower high major trend reversal. Coming into today, we gapped down in relation to yesterday, triggering the sell on the daily chart here. Big gap down, strong bar on the open. What about buying the low of 1? Man, it's a pretty dangerous trade, and therefore most traders are better off waiting. If you're going to buy on the open and you get a big bear bar closing on its low, it's better to wait for reversal bar. We're probably always in short with the gap down and the follow through. Increases the odds that we go at least a little bit lower. 2 consecutive bear bars, 1 and 2, probably going to go at least a little bit lower. 3 bear breakout, good for the bears. However, big gap down and big sell climax increase the risk that we form some kind of trading range. And then 4, we have a bear bar. However, the body of 4 is smaller than 3, increases the odds that we're probably going to bounce in. 5, doji, good for the bulls, good for doji, so a pause in the selling, that's good for the bulls, but not a strong reversal bar, increases the risk of sellers above. But we're so far from the moving average that selling down here is really difficult. What are you willing to risk relative to the profit potential? And then 6, breakout pullback sell, low 1 short. But not a good sell signal bar, increases the odds of buyers below. And then bear breakout 7, sell climax testing the July 16th low. However, more traders buying down here than selling. It looks like this is more of a profit taking area than an area to buy, and therefore probably more traders buying the close of 7 rather than selling. Micro double bottom 8, good for the bulls. Always in bears, probably get out and look to always in bears, get out above and look to sell higher. Bulls will buy, betting on a couple of legs up. And then 9, bull bar, breakout. It's a low one short, but a bull bar, probably buyers below. And then 10, we have 3 consecutive bull bars, 8, 9, 10. But a sell climax increases the risk that whatever reversal up we get will be minor. However, the pullback could go much, much deeper than what seems reasonable. So we could easily test the 3 high, the 2 low, or even the 1 low. Bull bar bull bar 10 or 11. Good for the bulls. Micro channel 8, 9, 10, and 11. So probably going to go at least a little bit higher. And then 12, doji. Micro channel since the 7 low, but body's getting smaller, a lot of overlap, probably going to pull back soon. 13, bull bar, still by the close. However, we have a big down and now big up. Big confusion increased the risk of a trading range. Reversal 13, always in bulls, okay to get out below. And bears, they'll sell, but you're selling after a micro channel up to 13, and that probably limits the downside. 15 consecutive bear bars, 14, 15, second leg down, likely. And then you can see what happened on 16. 16 rallied, testing the close of bar 12, so the bull, or 13. So the buy the close bulls 13 bought more lower, able to get out break even during 16. Bears, you'll have some bears selling the close of 16, betting that the market will go lower. However, it's possible we try and form an early higher low major trend reversal. Bear trend line break to a higher low. Major trend reversals on the open, they often can work with a few bars, and therefore that's the risk that the bears are facing here. We could easily get a small second leg down around 62.60, find buyers, and get a reversal up. $17, doji, not a good sell for the bears, but not a good buy for the bulls, so we may end up going sideways. And then 18, we triggered the buy above 17, found sellers, and we formed a bear bar. We may go a little bit lower, but I suspect we're probably going to form a higher low. We may test the breakout point above 7 or 8, but there's probably buyers if and when we test it. 19, doji, sign that the momentum for the bears is slowing down. Looks like we're going to get a bounce. And then 20, a bull bar. However, not a great sell for the bears below 20, but not a great buy for the bulls above bar 20 either. And one of the problems that the bears have, it's kind of like what I mentioned around 72, or it's what I mentioned over here with bar 67. One of the problems with 15 is you're selling around the 50% of the rally, and therefore selling down here and putting a stop up here is really not ideal, because if this forms a trading range, there's a greater risk that we reverse up and test somewhere up here, and we still may get a second leg up from 13. 21, tried to break to the upside and reverse down. Not a good sell below, and therefore probably buyers below, even if we trigger the sell and fall below 19. And then 22, micro double bottom. We may go a little bit lower, but not a good sell, probably buyers below. And then we got a bear bar, 23. Good for the bears. We may try and go a little bit lower. Some bears, they can sell below 23. However, if they do, what do they do right here? If they sell below 23 and you get a bull bar, you got to get out. Too much risk that we form a double bottom, 19, 23. And then 24, doji. Does that look like the momentum you want to see if you're a bear selling the close of 24? Of course not. It looks more like the start of a reversal. So selling the close of 24 is really not ideal. 25, possible. We have another bear bar, but not ideal. And then you can see what happened with 26. 26, strong reversal up for the bulls. Good for the bulls. Increases the odds that we're going to go higher. So really not ideal. 27, consecutive bear bars. 26, 27, increases the odds that we're going to go higher. And therefore, always in long, probably going to get a measured move up and may test the open of the day. 28, doji, so a pause after 26, 27, but still probably buy the close and buy the pullback. And then 29 bear bar, but more traders buying up here than selling. And then we got the bull bar 38, 39. Consecutive bull bars 38, 39. Good for the bulls. Increases the odds that we're going to go higher. And then we got a bear bar on, I said 38, 39, 30, and 31. And then we got a bear bar 32. Possible 2 legs up, 13, 32 with the bear bar, and nested 2 legs here. Pause here. Okay for traders to exit, but I don't think they have to. The channel up's tight, and therefore the first reversal down is probably going to be minor. And then Doji 33, not a good buy above. Breakout pullback buy, so high 1. So it may end up going sideways. 34, another Doji, and therefore momentum is stalling, increases the odds that we get a pullback. And then 35, another Doji. We have 3 consecutive inside bars, possible final flag. And therefore, if we break above 33, we may fail and reverse back down. Or if we break above 35, we may fail and reverse back down. 36, possible double top. 32, 36. It's a swing sell. You can take this sell for always in bulls, get out below 36. Bears can sell. Stop above 36, betting on a possible lower high and a test back down to the 7 low. And then we got a bull bar 37 for the bulls, second entry buy 35, 37. However, if always in bulls get out below 36, they're going to be hesitant to buy above 37 if they think the market's in a trading range. You know, if it's a small pullback bull trend, that'd be different. But this is not a small pullback bull trend. This is 2 legs up in what might be a trading range, and therefore there might be more traders selling above 37 than buying. 38, bear bar closing on its low, trapping the bulls who bought above 37. Always in bears, always in bulls that did buy at 37, get out below 38, and you'll have more bears selling below 38 or below 39 if it gets followed through. Follow through 39, looks like we're going to go at least a little bit lower. And then we have a doji, but a bear bar closing on its low, so it's an inside bar. Breakout pullback sell, 40, so a low 1 short. Looks like we're going to go a little bit lower. 41, bear bar, good for the bears. Looks like we're going to test down to the 26 low, which is the bottom of the second leg. Leg 1, pullback leg 2. And looks like we got a second leg trap, so probably going to test down to 26. But because of what I mentioned over here, I think we're probably going to fall below the 7 low and test the July 16th low. And looks like that's what we're trying to do right here. 42, consecutive bear bars, 41, 42. In a larger bear micro channel from 38 to 42 increases the odds that we're going to go lower. And then we got a doji 43, but not a good reversal, so probably sell the close. 44, bull bar, but probably sellers above. And then 45, breakout pullback sell, good for the bears. Looks like we're going to go at least a little bit lower. And then 46, bear bar, but you can see some profit taking. What about buying? The close of 46, close of 47. I would not. This channel down is way too tight. And that increases the odds that we're going to go lower. Bear bar 48, possible wedge 44, 46, 48. Probably increases the risk. Let me make the bars bigger. Increases the risk that we have buyers down here than we did on 47. But as far as buying 47, it's really not a great buy. We may go sideways here. But buying above 47, low probability. 48, and then, or excuse me, buying above 48, low probability. 49, buying the close of 47, the bull bar is low probability. Let me back up. I'm getting confused on the bar numbers. 48 is a bear bar, buyers. And then 49, it's a bull bar, but a close below the midpoint. Not a good buy the close bar or buy above, so we may go a little bit lower in the tight bear channel. 50, another bear bar, but we're alternating bull bars and bear bars, and that increases the odds that traders are going to buy the close of 50 rather than sell it. But the one thing the bears have going for them is the magnet, the 7 low, and the July 16th low. Then 51, another bull bar, similar to 49. Looks like we're going to stabilize and try and bounce, but the channel down is tight, and therefore the bulls need a strong reversal. 52, inside bar, but middle of a tight trading range. Not ideal. You'll have some bulls buying above 52, but I think a lot of those bulls are willing to trade small and scale in lower, such as around the July 16th low. I was one of those bulls, and I was willing to buy above 52 and scaling lower on the near the July 16th low. Doji 53, not a good buy for the bulls. Increases the risk that we pull back. Then we got the bear breakout 54. A little bit of a surprise. So we may get a small second leg down. Looks like we're going to fall below 50 and test the blue line. And then we have another bear bar 55, 3 consecutive bear bars. Increases the risk that you have bears selling right here, but I still think there's probably bulls not buying not far below. And then we got the surprise 56. Good for the bears, but it's a sell climax at support, the July 16th low and the 7 low, and it's not a strong bear bar. And it's climactic. That increases the risk that we get a bounce. And then 57, doji, not what you want to see if you're a bear. And then the bulls ended up getting the reversal up and test of the 53 low. 58, 59, good for the bulls. Looks like we're going to go higher. 60 by the close, still going higher. 61, same thing, but getting tails. 61, 62. 62, buy climax bar closing on its high. However, it's a micro channel, and while it's possible that it gets some kind of measured move up and test of the 36 close or the open of the day, there's also the risk that it gets a deep pullback. Look where you are. You're in the middle of this overall range. We're basically formed a triangle, and this is the apex, and we're testing it, and therefore that increases the risk. Let me show it over here. Hard to see, but anyways, that increases the risk that we get a pullback. 64 bear bar, reasonable for bulls to get out below 64, but okay to use a wide stop scale in. And then 65 is surprise. Enough of a surprise. A lot of bulls who bought the close of 63 and more lower. I think it's okay for those bulls to get out on a bounce. However, I think the odds are we're probably going to form a higher low rather than completely sell off to the 56 low. Doji 66, not ideal for the bears, but probably a second leg down for the bears. And then we started going sideways right here. I made the comment on the 60-minute chart. We had a bull bar, and I thought that this bar was probably going to form a weak sell signal bar, a weak low one. And I made the comment somewhere around here that it was 14.15, maybe 14.10, that if the bears can make the market go sideways, if the market goes sideways around this price level, where 68 and 69 are, if it goes sideways, it'll form a weak low one short, and that'll increase the odds that we get a bounce. And that's what happened right here that's what happened right here. 60, 70, we broke to the upside, testing the breakout point 64. Some bulls buy the close, buy more lower, get out break even, but not a good bar for the bears, 70 on 70, and therefore some bears who sold the close 65 and scaled in a higher 70 we'll look to get out break even on the entire trade. 72 corresponds to the close of the 60-minute chart here, so a bad stop entry sell increases the odds that there's buyers below 66. And that's in part what happened right there. We triggered the sell on the low one on the 60-minute chart, and we also got the second leg down for the bears from the 64 high to the 66 low. Second leg down. 73, 2 legs down for the bears. Not a good buy signal bar for the bulls, but I suspect we're probably going to go above the 73 close and allow the trapped bulls out. And you can see that's what we did in the final minutes of the day. And then 76 bull breakout, but then we pulled back and we went sideways for the rest of the day. For stop orders, I thought it was always in short below 1. Probably better to wait for bar 2 and sell the close of consecutive bear bars. Bears, if they're short, they get out above 8. And then the bulls, if they buy above 8, which is probably okay, they get out below 14. Bears, if they're short below 14, where do they get out? I think if they're smart, when they see 24 and 25, they would bail out of the trade. It's 2 legs down, 19, 24 at support, the bar 8 breakout point high. And if you're a bear and you sold below 23, you're selling at support, the 8 high and the 7 high after 2 legs down, when the odds are the bulls are probably going to get a second leg up. So if I'm a bear and I sold below 23, a stop order, which is not a terrible trade, 24 is the last follow through bar. I definitely don't want to follow through bar like 24, certainly 25. And then 25 is a bad sell below. and it's a loss of momentum. And you can see what happened. A lot of the bears who sold 23 bailed out of the trade. Your entry price on 23, the low of the bar is 62.5, and therefore your entry price is 62.25. And then look right here. The market went to 61, and then it went to 61 again. So it allowed the bears who are quick to bail out of the trade. I thought we're always in long on 26, betting that we'll go above the 13 high. So bears, they have to get out above 26 if they're not already out. Bulls can buy, and they get out below, they can get out below 34 or above 33. I think they definitely get out below 36, certainly below 38 or during 39. Bears, they sell 36, they sell 38, they sell the close of 39, anywhere in there. And then the bears, I think it's tough to stay short once you start seeing 46, 47, 48, because the odds are we're going to go sideways with the channel down so tight that the upside is probably limited. Bears, they can get out above 52, but it might be a trap and lead to a second leg down. Bears, they can get out above 52, but it might be a trap and lead to a second leg down and test of the 7 low. Bulls, if they buy 52, life's a little bit complicated. It's probably easier. It's easier to buy above 52 and then buy more at the 7 low, but it requires trading smaller and management of the trade, which makes it more difficult. And therefore, most traders, if they buy above 52, they're better off getting out below the 50 low and then buying again, either above 59, let's say above the 59 high. And then bulls, they're long above 59. They probably get out below 64 or during 65. And then maybe, if they're really determined, maybe they buy again above 75. Bears, do they sell 64? Maybe, but I think it's just really tight, and there's no way I'm going to sell below 64. For limit orders, I thought buyers below 6, but you have magnets below the July 16th low, and therefore, even though buyers below 6, it's a big sell climax down to 5. And therefore, we'll probably get some kind of second leg down, and therefore it makes it tough to buy the low of 6. I think, if anything, you're buying some distance below 6. For me, when I take those kind of trades, I wait to see what the bear breakout looks like, and once the bar starts to get big and stall, I'll start betting on reversal. And then I thought sellers above 15, but buyers below 18, buyers below 19. I thought buyers below any of these bars, and I thought sellers above up here, but not my favorite trade to take. And then all through here, I thought buyers below, but you needed to stop below July 16th. So there's no way, I'm not going to sell in here. I'm willing to sell here and sell 42, sell 43, sell above 44, but I'm not selling down here. And then I thought it was just basically buy anywhere, just close your eyes, buy and use a wide stop. Maybe 15, 20 points, but you put a stop somewhere down here and bet on the reversal. And then I thought buyers below bars all through here, betting on a test of 63. And then buy the close, sell the close, probably sell the close 2, sell the close 3, sell the close 4, but then probably buy the close, maybe 10, 11, 12, but you're buying after a big sell climax, and that lowers the probability for the bulls. I thought buy the close 26, buy the close 27 for a bounce. I thought sell the close 39, 40, 41, 42, even 43 is all sell the close, but probably better to sell a pullback at that point. Then probably buy the close 60, 61, 62, and even buy the close 63. And you can see, buy the close deep pullback, there's still a 60% chance we test the close. And in this case, that might maybe a little bit higher, but in the event, we did test the 63 close. But obviously a lot of disappointed bulls up here. Let me take a look. So what do we go on next week? I think we're probably going to find buyers down here, and we're probably going to get a bounce. Weekly chart, I forgot to mention, we have a decent reversal of the past 2 weeks, and that's good for the bears. I think the most important thing is this. Here is the previous all-time high. We broke above it, and we're pulling back. I think the bulls are going to have a hard time getting far from this area. And I think we'll ultimately get down to 6,000 in the bottom of this breakout over the next several weeks. And it could take a couple of months for that to happen. We could go sideways for 3-4 months and then test down. But I think we ultimately will test down. But as far as next week goes, probably disappointing follow through after this week's outside down bar. I think less likely this next week looks like this bar right here. So less likely we get some sort of vacuum test of 6,000 and form a big bear bar. If we do trigger the sell, we'll probably reverse up and form some sort of disappointing high one buy setup and then maybe sellers above. So I suspect next week's probably not going to be a strong bull reversal bar. And if it is a bull reversal bar, it's probably going to be weak. And it'll probably have sellers above and we'll get a second leg down a week or two later. But we'll see. Okay, I'll answer one or two more questions and then I'm going to wrap this up. All right, I'm not seeing, I'll give it a few more seconds, but I'm not seeing any sort of more questions asked. Okay, one question. Why are you today using the 15-minute RHH instead of the 15-minute chart? Because of NFP. I don't know what NFP means. Big gap on the open. In what situation do you pay attention to the key turning points of pre-market? I kind of flip-flop. Some days I'll trade a Globex chart entirely and I won't even look at the RTH. Other days I'll only look at the RTH and not pay any attention to the Globex chart. I generally try and lean towards the Globex, but overall, kind of it's something I've talked about for a while. I thought the odds were really high. We're going to test the July 16th bar. And when we formed this bar, I saw in the pre-market, obviously we had a big number up here. And I said, oh, okay, we're gapping down, quite a bit. And, technically, I know this person's referring to because technically I have this as a Globex chart. But normally it looks like this. Here's the Globex. And here's the morning session. And my overall thought was big sell-off, big sell climax here. I thought the downside, after the 9 o'clock bar, and this actually made me more willing to buy and hold. After the 9 o'clock bar, my overall thought, let me do both so you can see really what I'm talking about from both examples. After this sell climax here in this bull bar, which is basically the rally to 12 and 13, I thought the odds were high that whatever reversal down we got would be a higher low. And that's what this was right here. It formed a higher low and we retested it. But yeah, I don't pay attention to, I'm sure there was an event or news report. I rarely look at the news report. The only thing I really look at is, I have this CME FedWatch tool. I just click on it occasionally and it tells me when the next, obviously we just had one, but next week it'll say, however many days from now we're going to have an FOMC. And that's really all I pay attention to. I try and be really unbiased. For me, I get it. There's all sorts of news things. There's all sorts of stuff. And, I generally don't trade much of the pre-market. Sometimes I do. And if I'm going to trade the pre-market, I'm going to pay attention to, some of the, the 8:30. I got to think my time. So 7:30 Central Time, 8:30 Eastern Time, pre-market reports. But overall, I really just generally, at least, the past couple of months, I've really just been trading the open. And really the session, the US session. So I'll start trading on the open. And some days I won't start trading until 12 or 13, just because I just don't make it to my computer in time. And that's okay. I'm never in a rush to start trading. The only thing I care about is the quality of the trades. What did I study in university? I studied finance and minored in marketing. Personally, I actually liked marketing more than finance. One of my problems was, finance, I don't even think I had a technical analysis class. I applied for one. I didn't get into it. I got rejected from it, which that was kind of funny. It was my junior year, I think junior year or going into senior year. At that point, I studied Al for 2 or 3 years. But one of the things with which you'll learn is if you've ever been around a lot of either, how do I put it? If you've ever been around a lot of people that talk about the market, or what do you call them, financial advisors and whatnot, and you'll learn that a lot of them don't know anything about how the markets operate. They understand the fundamental aspect of the market and all those things, but from a price action technical standpoint, they don't understand any of it. They often talk in universities how technical analysis is a joke. I remember I had one time, it was in a finance club meeting, or I say meeting, it was a finance club thing that someone invited me to, and I remember sitting there sophomore year, and there was a CEO of a major financial corporation. I think that in Arkansas they have, I don't remember, maybe 10 billion under management, maybe 10 or 40 billion. I want to say probably 10 billion or 7 billion under management. They did a lot of fixed income trading, and they told the class that day trading is actually not possible. They said it's you'll lose money. It's not a possibility. And what was funny to me is I thought that was actually crazy of a statement. You're the CEO of a major conglomerate of an institution that's very, very respected in Arkansas. And they basically, I won't say the name, but if you know the company, Walmart was founded in Arkansas, and this company, this financial firm, made their wealth from, I believe, selling Walmart's fixed income. They raised Walmart's, the bonds or fixed income revenue. They raised Walmart. They underwrote Walmart's fixed income bonds long before they were Walmart, and did a lot of things in Arkansas, and they made a ton of money. And that CEO told me at the time in the class that day trading is impossible. I didn't ask the question, but he mentioned it. And what I thought was so interesting about that is, how can you say that day trading is not possible when every when every hedge fund in the world takes intraday trades? I know of financial advisors that will place trades because intraday the market hit a price level and they bought. That's intraday buying. I thought it was just idiotic of a thing to say. And here this person is. He's a CEO. Probably making $10 million a year, and he has no idea about markets, at least from the standpoint of technical analysis. But overall, I liked marketing. I think marketing's fascinating, and I liked it a lot more than finance. Probably because at the same time, I was studying a lot of Al, and there's a lot of contradicting things I learned in university. There's some good things, but I don't think it taught me. It didn't teach me how to trade, that's for sure. But of course, it's not really supposed to. Okay, Brad, what did you mean when the settlement is 28 points lower than the last closing day on the 30th? Yeah, I never said anything about the settlement being 28 points lower than the 30th. So that was not me that said that. And if I did, I misspoke. Okay, I'll wait for 1 or 2 more questions, and then I will wrap it up. Yeah, I'm sure if your dad's a PR, he doesn't like marketing. That kind of makes sense. All right. It looks like that's it for questions. Thanks everyone for joining. Hope everyone enjoyed the free day, learned something from it, and yeah, I will talk to everybody sometime next week. Take time this week to learn something. The best traders I know, they never really turn off their brain. They're always thinking about the market. Obviously take breaks, but they're always thinking about charts and thinking about what they could do better. All right. Thanks everybody. Take care.